Did things really got worse in the housing market? Well, that's why we're here. Let's find out together. Hello, everyone, and welcome back to another episode at Novarise Invest, your channel for financial education. So today I have a market update for you because it seems that things with the housing market are still getting well, and if anything, it seems like it has gotten worse. So what we're going to do today is go over those updates, see how they impact you, and go over the options that you have so you can make an informed decision when it comes to buying a property, whether it's for you to use as a primary residence or for you to use as an investment property. So let's get started. All right, so here's an article from the Wall Street Journal that talks about mortgage rates, and they're informing that rates are closing at all-time highs and 4%, making home affordability even tougher, right? So according to this article, this is the highest it has ever been since May 2019, right? So as we're scrolling down through the article, we're facing the reality here that mortgage rates actually hit their highest level in almost 3 years, further straining affordability in a market where prices have risen steeply. I mean, it is no surprise that the cost of housing has gone up tremendously. When you add this to the equation, it just makes it worse. And as we're scrolling down, we actually see here the stats and how fast they're actually changing week over week. So in this paragraph, you can see that the average 30-year fixed loan rate closed at 3.92% for the week that ended on Thursday. This article came out on February 17, 2022. And just a week earlier, this same mortgage for 30 years at a fixed rate, according to Freddie Mac, was actually at 3.69%. Okay, so we're talking about a very quick jump, and this is even before the Fed hike. I know they have come out and said that they are foreseeing or they're anticipating increasing the rates in March, but nothing is definite. They haven't given us the green light. They haven't formalized anything today, but it seems like the market is already adjusting to that piece of news that went out a couple of weeks ago. And the market, it's already running its own course. And as we're scrolling down, so we're talking about the Federal Reserve. We already went over that, how the market is reacting and all of that stuff. And once again, it's reiterating how mortgage rates have risen now for 3 straight weeks. And just about a year ago, the most popular home loan was only at 2.73, just about the record low of 2.65. Once again, just like I mentioned in prior episodes, in spite of the increase of the rate, we're still at near historic lows. If you compare the rates that we have today to back to the 1980s where we had the double digits, that's when the rates were really high. So just a matter of perspective for you to consider and to keep that in mind. And as we're scrolling down this article, it talks about the story of Austin and Michaela, who were lucky enough to lock in a rate for 3.175%. And on top of that, they were able to find a house for $150,000. This is actually a very nice price considering that the median single family house price today is at $361,700. So median means exactly right in the middle, right? So that was the price that was recorded in the fourth quarter, according to the National Association of Realtors. But once again, they got really lucky. It doesn't mean that everybody else is going to be in that same situation. So what options do you really have, right? So when borrowing costs increase, home buyers are faced with a choice, just one choice, according to this article. You pay more, right? Or you just simply find a less expensive home. But we all know that finding a less expensive home is extremely difficult nowadays, especially with the shortage of housing and the competition that we're facing because everybody is trying to get a hold of a home. And when you are summing up high interest rates coupled with growing housing prices, that means that some buyers are going to be pushed to the sidelines. In other words, affordability, it's a real issue right here. And because of everything that has been going on, mortgage applications fell 5.4% from a week earlier last week, according to the Mortgage Bankers Association. So what's interesting about all of this is that economists have actually predicted that the mortgage rates were going to reach 4% in December 2022. So far, we are at February 2022, and the rates have already reached that point. So the rates are actually growing a lot faster than some economists are predicting. But once again, because of everything that's going on, the demand for mortgages and even for refinancing are actually going down. And refinancings were, in fact, a big chunk of the volume of the mortgages over the past 2 years. So what does it mean for you? It means that you have to be cautious. Does it mean you should not buy a property at all? Not necessarily, because as you might have seen in the article, some families are still able to get a hold of houses that are affordable as a way to sort of like off balance the increase in rates. Yes, they got lucky. They got a very nice affordable house, and at the same time, they got the low rates. But once again, you need to keep things into perspective. Even though the rates have gone up a little bit, we're still not at the 2-digit benchmark, which means we're still near historical lows. So you still have a little bit of time. Just continue on your search, whether it's for your primary residence or for a rental that you're looking to buy and add to your investment portfolio. If you're buying as a homeowner, make sure that you can, in fact, afford it even with the increase of the rates. And of course, make sure you can keep up with the expenses that are associated with owning a home, whether it's property taxes, whether it's the cost of maintaining it. Make sure that you run those numbers and that you're making a decision that allows you to feel comfortable financially. And if you're buying a house as an investor, then once again, the magic word is cash flow. Make sure that whatever numbers you're running, that you are including any operating costs, the cost of the mortgage, the rates, you name it, and that after paying all of that, you're still cash flowing. Now, for those looking to buy a house and are wondering what are the necessary steps that you need to take in terms of documents, credit, what is it that the lender wants to see in you, I invite you to check this episode on the side that's going to help you get the answer that you need, and it's going to help you show up in front of your lender completely prepared. Make sure you check it out, and I'll see you in the next episode. Bye-bye.